What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is November 18th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about what's going on with Bitcoin's price. As we've been slowly grinding up here after the breakout last Monday, we've been coming up here to retest those prior all-time highs around 93K. And this is right in line with the line of resistance we've been watching for 2 years now. So I want to spend some time to talk about what my thoughts are here, what to look out for. We're also going to be talking about altcoins as well and trying to figure out, where the opportunity is in the market right now. Have altcoins really kicked off an altcoin season? And beyond that as well, talk about equities, because there is a big shift going on in the stock market right now that I think you guys should be aware of. And it's where the real money-making opportunity is going to be. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to go ahead and spend some time here to dive into price action, because Bitcoin has had this big spring up, about a $30,000 increase in price since back here in October, about a month ago. Crazy times for Bitcoin. Nice bounces off the 21-day with massive acceleration here over the last 2 weeks. However, since the last couple of days, going back towards the mid part of last week, we've been really kind of grinding sideways, slightly up here, trying to retest the top wick that we had back on Wednesday. And while we've got this grind up in price here, a lot of people are confused as to whether or not this is a sign of some distribution, maybe stalling in price. Are we due for a correction? Are we due for further continuation as we're slowly but steadily grinding up? The major thing I want you guys to understand here before we talk about really the big relevant thing, which is this long-term line of resistance made up of the two prior highs of the last cycle, that is clearly playing a significant role here in price, is that Bitcoin tends to do this kind of price action many times throughout history. I can even pull back here, for example, to 2023. Same time last year, we had a nice breakout off the 21-day from 27,000, 34,000. Pretty relative and similar move here. Really nice expansion in price, 30%, give or take, right? So good move here. And then what happens is we have this kind of slightly boring period. And this is essentially where the market is trying to figure out whether or not the bulls are still there. If we have further price acceleration, is there going to be distribution and sell side pressure? And what you generally see is that price comes up here. It'll continue to build up a little bit, perhaps. Sometimes it holds sideways like it did here. And what you do is you wait to see how it reacts to the 21-day. Sometimes you get immediate buy side pressure off that 21-day, and any downward dips are continuously getting bought, and we're able to touch that moving average multiple times. And that gives us the acceleration to move even higher from, in that case, 37K all the way up to around 49,000 into the anticipation of the ETF launch. You can go back in Bitcoin's chart. You will find this time and time again. What do I want to emphasize in this? Is it here? Am I here to say that it could go up or down? Partially. What I'm really here to say is watch what happens at that 21-day. I know a lot of people are FOMOing right now and feeling like they need to get in, but I have to tell you guys, really, as we've emphasized before, Bitcoin is not where I'm looking to make any trades in the market. And if you are going to do that, you're going to probably have to deal with using leverage of some sort. And really, as price is already at this kind of height, this isn't the period of time to really start exploring, utilizing derivatives and perpetuals to be able to lever up in the market. The time to do that is when you're, coming back and testing those moving averages, and you have a better risk reward profile to go long. And the same goes for shorting. I wouldn't recommend that. So the second thing here is beyond looking for the 21-day and seeing how Bitcoin reacts on that 21-day, which we're extended away from. We've been extended away since back here in early November. The big thing I want you guys to keep in mind is how price reacts with this line here. This is a very significant line here. And give or take, it's a little bit subjective. Maybe it points up a little bit higher, a little bit lower if you go in the absolute top of the wicks. Irrespective, in this upper 90K range here, I want you guys to be very cautious, because there are going to be a lot of people, whether they're trading spot or trading leverage or just long-term hodlers, who are buying and holding until 100K. It's a big even level. It was the same trap that a lot of people got caught in the last cycle. And I don't want you guys to feel like that's the moment where you got to go all in, or you got to start taking crazy risk, or that this is just the beginning. We're going to 500K, whatever. Very probable chance that that's not going to play out. I'm just being real with you guys here. Just give them an honest take. Doesn't mean I'm being bearish here, right? At the end of the day, you guys know over the last couple of months, we've been talking about the positive trend shift in Bitcoin. And to be honest, it's made a huge acceleration from 53K to 91K. Percentage terms, it's not something that's crazy in the history of Bitcoin. But if you consider the market cap increase and the liquidity that's been coming in, it is substantial. It's definitely noteworthy. So watch what happens here around this line if we continue to face chop. And along with that, I would say if you're looking for any entries into altcoins, into Bitcoin, wait for that cool down to the 21 day. I think that is where you're going to have a much better risk reward profile for setups in the market. I wanted to talk though about where some of the really exciting price action has been, and it's been in plays that encompass some of the altcoin market, excluding Bitcoin and Ethereum. Ethereum for the most part has still been incredibly lackluster, completely faded all of its gains, completing bearish engulfing candle here. Break back down below the 21 day to new fresh lows. We haven't been this low since back in March of 2021. So ETH is not looking very good here. I mean, of course, in dollar terms, it's up, but at the same time, it has not been able to break the new highs, and it has bled out over 61.5% since back in December 2021 against Bitcoin. Don't touch this with a 10-foot pole, in my opinion. Like, wait until you get some real confirmation about the 21 day in order to really go long on this. Same with Sol. A lot of people are asking, oh, is Sol breaking out the other day? Maybe it springs up here, but very unlikely. This has been a range for months where every single time, anytime there's optimism, you see even the buy side volume has increased here. You got a lot more optimism coming in, new inflows. Just an opportunity for insiders with large bags to distribute, right? So where is the exciting price action happening? Well, we're seeing it a lot over the last 7 days. I mean, obviously in meme coins like Peanut and Pepe, for example, and Bonk, but you also have it in your typical Momo trades or momentum trades like Stellar or XRP that have come into the spotlight again. And we can see here, a lot of people are getting really juiced up about it, and they're saying, oh my God, XRP like effectively doubled against Bitcoin. Or doubled really in percentage terms and dollar value as well. And a lot of people are wondering, Nick, should I buy XRP? Should I buy XRP? And the thing I want you guys to understand here is that, I've traded in crypto markets since back when XRP was the play. Like back when XRP in a period of time where Bitcoin was already going from when I got in, around like $1,000-$1,200 for Bitcoin's price up to 20,000 during the 2017 bull market. Then you had plays like XRP that were outpacing Bitcoin 3,800% or 1,800%, like having three substantial moves. One also towards the closing altcoin cycle, which we made a killing on during that period of time. The main thing I wanted to say though is that you're not going to get those kind of returns here with plays like XRP. You might get them in the meme coin space. Absolutely, there will be some plays that do this and will be the kind of darlings of the cycle that you hope and pray you have some exposure to. But the main thing I wanted to say here is that I would say at best what we've seen over the last couple of years since 2020 is that the 200 week is where price gets held down here. And XRP is really, at the end of the day, it's a huge enterprise scale like unloading distribution scheme to make a shit ton of money. Sorry, I'm just going to call it out for what it is. Some of people out there might like Ripple's technology. They might feel that XRP holds utility there. I'm not here to even speak about that. I'm just here to let you know the chart doesn't lie and the price has been going lower and lower against Bitcoin throughout history. So that's the key thing here to understand. But beyond that, I just want you guys not to get trapped. Like, put aside whether or not you like the technology. I'm here as a friend to really let you know that these things come and go. XLM as well, another great example, right? Again, this is something where while we're out here at the bottom accumulation range here, I don't think you've got the steam to get up to these prior highs here. You might have enough steam for this to maybe come up to the 200 week, but that's even asking, I think, for a lot, considering that this has already made a 100% move. And important to note that you're only break even now if you've bought between January before, you're now just break even against Bitcoin on these plays. And you can see that when they usually have these kind of moves, they usually fade right back down quite quickly. So the stability of those trends are no longer intact on a lot of these plays. So I don't want you guys to get kind of trapped. And the same goes here for Cardano, right? Yeah, good on those who might have bought here during, historically a range of accumulation where people buy, right? But at the end of the day, the question is how far can this go? We've had rallies here, like for example, the one from 800 sats to nearly 1600. You had this one here from 474 here to 840 or 900. typical percentage range where you're going to start getting a lot of bag holders unloading. You're going to get insiders unloading who have an almost near unlimited supply of tokens, VCs, etc. People who are just looking for an out. So I would not really be buying here into the FOMO. I would wait. If you like these plays long term, wait until they cool down and see if they hold on the 21 day. Chances are they likely won't, in my opinion. But just again, letting you know, that's the kind of stuff I'd look for if I were to be not biased about it. Keep that in mind. Now, at the same time, as we talked about, these kind of mid large cap plays in the market, the infrastructure plays, are always some of the most liquid, and they're areas where if you wanted to use a little bit of leverage in the market, if you wanted to take a bit of additional risk, you can always definitely utilize leverage on these plays in modest amounts. And at the same time, you can also trade them spot as well. But the big thing above all is that if you want to increase that kind of multiple potential and you're really in it for the short term, not trying to backhold these plays, then I definitely recommend you use a proper exchange that's going to give you the tools and resources to do that. And I definitely cannot recommend more DYDX. Now, DYDX is one of the premier DeFi exchanges. I've been following the exchange and actually tested the earlier versions back since 2020, and the exchange has just gotten better and better. It is not only a great home where you can do a lot of trading on major cryptocurrencies and be able to trade with a degree of margin on a whole range of different plays like the ones we just talked about here, for example, like Solana, XRP, ADA, or Cardano. There's a whole range of different altcoins and plays that you can trade all from one seamless experience. But beyond that as well, there are some really big updates coming to DYDX that are going to make the exchange even more powerful. And I'm primarily talking about DYDX Unlimited. Now, I've been following the exchange for a long time, and the exchange has already provided a great experience as is, but DYDX Unlimited is going to offer some really cool updates and things that I don't think we've ever really seen, let alone in a centralized exchange, but especially in a decentralized exchange. The first thing that I wanted to bring to your attention is this thread here where they start to cover some of the big things that are going to be in there, like instant market listings. So in the era of meme coins, in the era of a variety of new narratives coming into the crypto space, like deep pen and AI, real world assets, you name it, this ability to have direct listings and liquidity is going to be incredibly valuable. It could very well make DYDX the home for where you're essentially not only going to be able to get access to opportunities as early as possible, but probably get the best liquidity for those trades as well, as many projects may immediately have their initial listing on DYDX. So it's like having really at the end of the day, like a SEX listing at the end of the day, like the kind of liquidity you would get at a centralized exchange, but it's decentralized and completely permissionless and autonomous. The second thing is Megavault. Now, this is going to allow for people to seamlessly just deposit USDC into what's known as the Megavault and essentially provide liquidity for all the major order books on the DYDX exchange. And I think that this is really cool. So it's a very streamlined way where you can provide liquidity. And not only that, you're going to get the trading fees as well, some of the trading fees that are collected on the exchange. And along with that as well, you're obviously going to earn from the P&L of the broader fund. So it's very, very cool. Along with that as well, they have a new rewards program simply incentivizing you to trade on the exchange. So I'm not here to tell you at the end of the day that you should just go trade and trade just to farm the rewards. But at the end of the day, if you're already doing trading in the crypto space, you should be doing it not only on a very secure platform like DYDX that's been around the block for many years and is working towards building the most safe, secure, and trustless decentralized exchange, but beyond that, you should be trading somewhere where you're going to get rewarded for it. So I definitely think that that is something you guys should keep in mind. Not to mention the affiliate program where you can earn upwards of $3,000 per month per referral. So this is something that I think is very important for you guys to keep on your radar. If you want to sign up for DYDX and try it out, you can use the link down below in the description where you guys will be able to sign up to DYDX and try it out. I think it's a really great platform. It's one of the most seamless DeFi apps I've had used in all these years in the crypto space. And I think it's one that you guys should definitely keep on your radar. And if you're curious to learn a little bit more from what's coming here in DYDX Unlimited, I definitely recommend you guys check out the blog post. They put a really good one out here in August covering some of the details, but basically covering a lot of the things that we talked about here. Anyways, again, at the end of the day, if you're looking for an exchange, that's the place to be. And speaking of altcoins, I wanted to go ahead and talk a little bit about others' dominance because this has been one of the big metrics we're keeping an eye on as we're talking about a potential altcoin season and getting prepped for it. What we need to see here is the signs that an altcoin season is presenting itself. And I want to kind of zoom out in the big picture here. If we take it to the weekly, we got back into the upward channel. As we talked about here on the channel, we also mentioned that there was going to be a potential short-term deviation. We got that. And while we haven't seen the breakout above the 100-day, which is still acting as resistance, this has definitely left me excited that, again, open up to the idea that we could see some broader expansion over the next few months, especially if Bitcoin starts to kind of stall and cool down. And it's that time where altcoins can really start to garner a lot of dominance. And when I say altcoins, I'm really talking about others' dominance, which are all the plays beyond the top 10. So again, we have a lot of our different plays on the radar here. We have Stacks, for example, which is coming down into our buy zone that we're watching. Again, if you guys want to know when we're placing these trades and stuff, again, you can always join the Dash report. But this is, again, a little sneak peek into some of the things that we're watching here in the market, some of the opportunities that we're seeing. Outside of that as well, we also have Render. Render is building up nicely on the 21-day, still hasn't broken that 100-day. But at the same time, this has at least got the right price action. Whereas Stacks in this case is well below all of its moving averages. It's still trending. The 21 days trending downward. I would wait for this to come down in this bottoming range and see if it can find some support. And we also have Fetch as well. I think Fetch is repeating what it's done here in the past. We're going to have another week or two where people are capitulating down here at this range of previous resistance in the past. That also is potentially providing a support. A lot of people are thinking it's going to be done for. Now that we're in the 200 week, there's a lot of volume and capitulation. You can see it here, like back in August, we had these big sell side volume candles. That's going to give the larger players, the smart money, the ability to accumulate larger positions. And we wait simply for that breakout above the 21-day. That's when things, in my opinion, would get really exciting. And it could potentially expand not only as high as where it was back in September, but even higher than that as well. So there's a lot of big things here to watch here in the market, guys. But beyond trading opportunities as well, it is important to understand that there are a lot of opportunities where you can earn for practically free in the crypto space by simply participating with a lot of early stage projects, a lot of the airdrop campaigns. We talked about this from time to time, and we've been covering some airdrop campaigns back from a long period of time here in this channel as a concept. But I want you guys to know that there is one big airdrop campaign that you should be aware of, and you don't have to really spend anything. There are some ways where you can get involved providing liquidity or trading, for example, but there is the Gonna Make It marketplace, which is the premier NFT marketplace for the energy ecosystem, one of the covered projects we cover a lot here on the channel. And now the big thing I want you guys to know here is that for the GMI or Gonna Make It airdrop, this is going to be one of the biggest projects we not only see on energy, but I think is going to be one of the biggest NFT-based marketplaces we're going to see in this cycle. So if you're bullish on the narrative NFTs, or if you feel that NFTs are going to start coming back as a major narrative, this is definitely one to participate in, especially because the barrier to entry is so low. So essentially, GMI has just launched Season 5. This is one of many seasons that the project has launched. And as you can see here, there are a ton of different ways in the dashboard once you connect your wallet to be able to participate in various activities that are going to boost your opportunity to be able to get points that will give you a larger claim of GMI down the line. So there are a lot of different things. You can also check where you stand on the leaderboard. But outside of this, well, there's a new rewards vault that helps you to track how you've been doing throughout all your different seasons. So this is also something that's very valuable here that you can go back and essentially track all the different activities you're engaging in and be able to see how you've been able to accumulate to a certain point or a certain amount of points towards the final close, towards the token listing as well. So there's all kinds of really exciting stuff going on here. The big thing though, at the end of the day, is that GMI and Energy as a network is focused on doing things right. They're focused on the long term. This isn't some, flywheel pop overnight and then it's going to disappear. Essentially, GMI is set to build something really real. And the whole goal of GMI and Energy as a blockchain is to make sure that there is a safe home for NFTs. NFT hacks are still happening. It's a big reason why the industry has been really shot over the last year or two. And I think Energy is going to help NFTs make a big comeback. There's a very good chance that it can happen here. And I think Tommy and the team have the right vision here. So definitely consider using the link down below in the description if you guys want to sign up. It'll give you guys a bonus on your GMI airdrop campaign rewards. And outside of that as well, you definitely can look into some of the really exciting technologies that are coming out, like the refundable NFTs. That's a big thing we're going to talk more about here on the channel, but ideally, every time you have a NFT created Energy, either it's going to be 100% refundable or 80-20, meaning 20% goes to the creator, 80% it stays in a secure smart contract, and then from there you can actually claim back 80% of the NFT that you minted. So this really prevents a lot of the rug pulls that happen in the industry. So it's very, very cool. It could really allow NFTs to finally flourish and have a safe home to really be able to grow long term. So definitely keep that on your radar. Last but not least, I wanted to go ahead and spend some time to talk about equities because there is a lot of exciting opportunity going on in equities, guys. Now, the big thing I want you guys to understand is that why we've been, again, both cautious on Bitcoin, also a bit more conservative or cautious on altcoins, is that I do believe that still we are not out of the woodworks here when it comes to the long-term historic line of resistance. Yes, that's right. I'm bringing it up again. The 95-year long line of resistance. We got to keep it on our radar still because we have dipped back down below it after breaking above it here back last week. And that's not the end of the world. This doesn't mean that this is the short-term deviation. It's going to completely collapse or anything. Maybe that could play. But the big thing I want you guys to just be aware of here is that on the grand scheme of things, if we take a look here at the quarterly chart, we're on the higher end here. We're in line with where we were back in COVID. We're in line with where we were back during the dot-com bubble in the roaring 20s. We're at the highest metric we've ever been on the Buffett index. Like when it comes to the premium that the market is being priced at versus GDP, we can't be ignorant of that. We can't just say, oh, my number go up and, Bitcoin ETF and yada, yada, Michael Saylor's buying lots of Bitcoin, whatever. We got to be very cautious about that. We got to be very real about that because anyone who ever bought during the dot-com bubble, or if you have family members who ever told you stories about buying during the roaring 20s, you will know that it's a devastation for a lot of people who buy into those periods of time and get caught with the bag. And I'm not here to leave you guys in that position. I'm also not someone who's been always calling for a crash, right? We rightfully usually believe that the number goes up and to the right, but sometimes there are periods where price stalls for over a decade or more. So you need to keep that in mind. I always highlight this chart here because it brings into perspective that there are periods of time where it's not just guaranteed to make annualized returns. In fact, you make significant annualized losses. And if you could be a little bit, kind of cunning in that sense and think about that in advance and understand, hey, where are we generally in the broad scheme of things? Where is the market being priced at right now? Then you can start to be in a better position. Now, the big thing I want to emphasize is not only just also the sentiment range of equities, like are we overbought or oversold, are we in a neutral territory, whatever, but beyond that as well, I want to talk about how opportunity shifts in the market. Now, with the recent political administration coming in, the upcoming Trump ticket, we've seen that Eli Lilly here, not only did it have a big drop on earnings, but with the upcoming administration has put Eli Lilly, which is the main manufacturer, creator behind Ozempic, which is the big weight loss drug that's been taking the US and the world by storm. We've seen the stock price drop quite substantially, but more than $200 here since back in August. And of course, the stock did phenomenal over the last few years here. We just take it here to the monthly. One of the best charts out of the S&P 500. Phenomenal, but not just in general over the past previous decade, but here since 2020, from $100 up to $900. The market has really been pricing in this company much higher off of expectations around Ozempic. But now Ozempic is finally, if we just take a look at the long-term chart, I think it's becoming clear here that this is the blow off top, and we're likely coming down to those long-term moving averages before we see any type of buy-side pressure, right? So that's a long way to go. And Eli Lilly is a big company. It's hundreds of billions of dollars here. So we're seeing this prior market leader starting to cool down here and give up a lot of its valuation. You're seeing this broadly speaking in pharmaceutical stocks because of the upcoming political administration. I think the market is starting to really reprice how favorable it is to own essentially these pharmaceutical companies and an administration that's focused much more, again, I'm not trying to talk politics, but with RFK coming in, again, I know some people like him, some people don't. It's going to change the dynamic here for pharmaceutical companies, no doubt about that. The market's properly repricing that in. It should have started that much earlier, but unfortunately, it's only doing it now. Along with that as well, XBI, same exact thing here, major sell-off in the pharmaceutical sector. So you're seeing certain sectors fading big time, and you're also seeing that as well in one very premier sector, albeit not in such a big way, and that's NVIDIA. NVIDIA had a pretty big down day the other day, and I think that's also played a role in weighing down the market. Not to mention, NVIDIA has been stalling since back in June. It's been half a year that NVIDIA has not made any price expansion, and that is also weighing down the broader semiconductor sector, which looks like it's forming whether you're looking at the SMH ETF, the VanEck Semiconductor ETF, or you're looking at SOX, which is another one of the semiconductor ETFs. I think you're seeing a very clear topping or head and shoulder pattern here that just looks exhausted and ready to come down at a minimum to the 200 week. It's not the end of the world. It's not doom and gloom. It just means you're going to find these stocks at a cheaper price premium. And I think the market is starting to realize that the AI premium in the short term is probably overpriced, right? And we've seen this time and time again. It comes down to the 200 week. People don't want to hear it, but it happens. And we're at the same kind of gap that we usually find where eventually it's going to come and cool down. And that probably means it's going to come somewhere here, below 200 points, likely down here towards 175, as the 200 week is generally always moving up. Not the end of the world, but that means a lot of valuation is rotating out of these plays. And at the end of the day, while that can be a damper on all equities, it can also allow for some to really be lifted up. Areas where you're not seeing massive insider selling from the CEOs of these companies like we are seeing in these technology companies. Huge insider outflows from Jeff Bezos here in November, huge outflows as well over the past couple of months from Jensen Huang and other insiders. And of course as well, Meta, albeit earlier in this year at the beginning initial rally. But since then, that really absorbed a lot of liquidity and price appreciation as prices have stalled. What we need to look for here is we need to look for new market leadership. We need to look for new opportunities. We need to look for where the innovation is going to be, not in the big tech companies that might have the potential in the most optimistic scenario to maybe go up 50 or 100% in the next 5 years. We're looking for plays that can really go beyond that, go 3x, 5x, 10x, 20x, because there are going to be equities that do that. But what we have to do is we have to think through a couple layers in order to find that opportunity. We first need to think about which corner of the market is going to grow. Is it going to be the large caps or is it going to be the small caps? And historically, guys, while I'm not trying to speak in any absolutes, it is very clear that sometimes small caps fare better in their ratios against large caps. So what we're talking about here, let me take a step back here. We're talking about the Russell 2000, and we're talking about the S&P 500. Right? And we'll talk about the NASDAQ as a comparison later on. But the main point here, I have the Russell 2000 S&P 500 ratio. And what you find here is that there are these ebb and flows where essentially one index outpaces the other. And that in this case means if we're going down in this chart, that means that the small caps are being outpaced by the large caps, and vice versa. If we're moving up, the Russell 2000 is outpacing the S&P 500. The big point I want to make here is that while there are periods of time where the Russell will outpace the S&P 500 during a down market, meaning it just fares better during the downside, there are also periods of time where it is favorable to be in small caps to take that extra risk. We saw it here in 2020, where essentially those small caps had a massive expansion here, about 42%, heavily outpacing into the peak of, or like coming up close to the peak of the stock market bubble in 2021, right? You'll have these kind of mid-cycle kind of movements here, but you also have them here, like we did, for example, from 2002 to 2006, 44% expansion. You also had it here in 2001, here to 2002, 23% expansion. So sometimes they're more modest, sometimes they're more aggressive. But the case in point here is that we're on the lower end of the spectrum here, where generally it is favorable to be exposed at a minimum. If you're going to be exposed to equities, be exposed to the small caps, right? If we're entering a slower growth environment or whatever, right? Maybe it's a period of time where we're still going to be growing and these small caps are at a cheap discount. We're now getting to the point here, if we zoom in, where we've had some serious, substantial sideways price action for over a year now against the S&P 500. And that's the first initial sign. Getting above the 200-day, spending much more time here than we used to, above that 200-day is a signal that the Russell is going to be outpacing the S&P 500. The small caps are where the market is starting to price in a higher premium in order to estimate essentially where these new market leaders are going to be. They're essentially repositioning or rebalancing into these plays that are incredibly discounted versus the S&P 500. And you can see that here with the NASDAQ to Russell ratio. It's a little bit inverse here. So if this is going down, the Russell 2000 is beating out the NASDAQ, and vice versa if it's going up the NASDAQs. You could also do RUT divided by IXIC. I don't want to get caught too much in the semantics, but I just want to make sure you guys understand here that generally speaking, in the case of the NASDAQ is usually the top performer, but there are these huge ebb and flows like we talked about where the small caps are going to do better, sometimes during market pullbacks like between the later part of 2021 into 2022, but also here during upward swings like in September of 2020. here to March of 2021. So the big point here I want you guys to keep in mind here is that there is going to be a lot of new market leaders coming to the forefront. We think the Russell 2000 is going to 3,000 points. I don't see that kind of price acceleration happening in the S&P 500 or the NASDAQ over the next couple of months. And that means that we've got the opportunity for the small caps to definitely give us a broader outpace than the broad market. But beyond that as well, if you can nail those right market leaders in the equity sector, those new emerging sectors, those new companies that are coming up and doing really exciting things where the market will start to price these companies at much higher multiples off of anticipated earnings and anticipated growth, then that is where you're going to really find the kind of alpha or opportunity in the market to be able to make life-changing returns. I would really start expanding your horizons beyond crypto, guys. It is the time to do this. It's the time to start getting prepped for this. We've been waiting for this in the Dash report for like a year or more. Like we've been talking about market leaders that we're looking at our radar for like 2 years now. And now a lot of them are really starting to take off. So if you guys are interested, you can always check out the Dash report down below in the description. It's our newsletter here on the channel. We not only send out a 20-page plus report each month, but along with that as well, we go through and we will have our discussion group, we'll have our alerts group, we have market updates that I send that are exclusive. I'll let you guys know when I'm trading in the market and building positions, what are some of those long-term exciting narratives that we're watching and when we think certain sectors are taking off. Some of them have already done phenomenally well. But again, if you guys are interested to check that out, you can always check it out down below. You can get 20% off if you sign up on an annualized basis. But that's it for today's video, everyone. Thank you all so much for watching as always. I hope you have a fantastic day wherever you are, and I'll see you all in the next video. Take care, everyone.